Hello everyone, I'm Kate Hill and welcome to an Adviseable special monthly city market update. We really do try and give you honest and balanced commentary and content here, no dramatic headlines. So before we get started, please do subscribe to our YouTube channel and hit that notification bell so that you're not missing out on further news updates, our suburb analysis reports, and lots of hints and tips around the property market. If you're enjoying our free content, then please click on that like button too. So this is our monthly Melbourne feature. When we talk about the Melbourne property market, we should always remember that this market has been one of the strongest and most consistent performers over the last 4 decades. So keep in mind that over the last 40 years, the median house price for the Melbourne region has increased by 7.9% per year on average, and the median unit and apartment price has increased by 7.73% per year on average. Despite what we may think, hear, and read, the Victorian and Melbourne property values have remained remarkably resilient, with prices remaining largely stable despite the drop in transaction numbers. This drop is the case all over the country, of course, which you'll know if you've been watching all our other news updates. The Real Estate Institute of Victoria's latest figures show that the market overall is actually in better shape than it was at the same time in 2019. So let's look at the city. So far, the Melbourne city market is remaining pretty resilient amid the second wave of coronavirus. The median house price for the Melbourne metropolitan area did drop 3.5% in the June quarter, but has remained 6.1% higher than at the same time last year because the previous 4 quarters delivered price growth. So it's really important that you keep that in perspective when you read these dramatic headlines about price crashes and price drops. In Melbourne's middle ring suburbs, the median house price was 9.4% higher than it was in June 2019, and the median unit price was up 6.4% over that same period. In Melbourne itself, there were still a number of individual regions which have recorded solid price growth. Figures from domain.com.au reveal Melbourne's more affordable suburbs were the ones which continued to record price growth during the June quarter. Median house prices in Melbourne's northwest region increased by 3.1% during the June quarter to reach $656,000, while the median in the Mornington Peninsula, for example, increased by 2.8% to reach $740,000. Suburbs in the west of the metropolitan area recorded a median house price increase of 2.5% to $620,000, and those within the east recorded an increase of 0.3% to $795,000. In the unit market, Melbourne's northwest region was the strongest performer, with the median unit price up by 6.5% to $511,000, followed by the inner east, which recorded a median increase of 3.6% during the quarter to $685,000. The figures provide further evidence of how misleading media generalization can be. While the median price for the metropolitan area may have fallen, the generalized figure disguises the reality that many locations are still delivering price growth. While there was still enthusiasm and action in the property markets, many vendors have actually withdrawn their properties from sale in the wake of the renewed restrictions. The reintroduction of more severe restrictions in July meant once again no public auctions or open for inspections could be held in Melbourne. It's really too early to tell what it all really means, but the lockdown has placed, to a certain degree, Melbourne's property market effectively on hold for that 6-week period while buyers and sellers have to sit on the sidelines. However, a small number of transactions are continuing to take place. The real estate industry did move very quickly to return to online auctions, with pretty good results achieved during that first weekend of renewed lockdown, despite just a few days' notice. The preliminary clearance rate for advertised online auctions during that first weekend was about 68%, and that was based on 45 out of 66 properties selling. Buyers did adapt fairly quickly to the new auction method again, with a number of registered bidders taking part, and one property actually selling for $170,000 over its reserve price. Agents report large numbers tuning into online auctions, including 150 people keen to watch the sale of a home in Doncaster East, which sold for $60,000 more than its reserve. For those who may have written the Melbourne property market off, think about this. Melbourne's population was growing at around 120,000 people per year. So that's like adding the size of a small city each year to Melbourne's population, like a Ballarat or a Darwin. Of course, this has slowed down for a while due to closed borders and the lockdown caused by coronavirus, but it will resume in due course. Record international and interstate migration will return once we get through these very challenging times. Also, the Victorian economy has consistently been Australia's strongest state economy for the past few years, creating more jobs than any other states. And Victoria's economy will surge again. There's no reason why it won't. First home buyers are back in the market, buoyed by the home builder grant and historically low interest rates. They are in the market in force right now. We're experiencing this every day. Consider also that there has always been strong foreign interest in Melbourne from tourists, from migrants, investors and developers, and in time this will return. So moving on to Victoria regions. While Melbourne may appear to be struggling at the moment, which it's kind of not, the regional areas continue to produce growth. Many regional markets, most generally those within maybe 1 to 2 hours of Melbourne, are benefiting from the pandemic period because the lockdowns have forced more people to work from home, enhancing a trend that was already underway. Victoria is the state with the best performing regional markets in Australia. They recorded the best capital growth in the past 2 years and continue to pump along pretty strongly. Even during the height of the pandemic, median house prices increased in multiple locations. Some regional centres have economies that are particularly well suited to withstanding this virus crisis, with most of their job sectors that have thrived in these restriction phases. Figures show that regional Victoria's median house price is up marginally to $420,000 in the June quarter and up by 3.7% on that same time last year. The regional unit market had a remarkable June quarter, with the median price up 13.6% to $339,000. CoreLogic figures reveal that regional Victoria dwelling values rose by a 4.3% average in the past 12 months. And some individual locations have actually grown at considerably higher rates than those averages. Regional Victoria has multiple suburbs and towns with double-digit median house price growth in the last 12 months. Think about that. And as I've said, growth has continued during the pandemic. With plenty of affordable properties on offer and low vacancy rates, investors can affordably achieve rental yields of 5 and 6% for houses, sometimes higher, and in locations with really good prospects for capital growth. The affordability factor is now, of course, also attracting home buyers who are moving away from the bigger and expensive cities in search of better quality lifestyles without compromising access to good employment opportunities. Property is a long-term game, as we all know, and generally speaking, if you have got the fundamentals right in the first place, then the longer you hold that property, the better your chances of achieving a significant return. New figures have revealed that median house prices in Victoria's top 5-year growth suburbs have increased by as much as $146,000. For example, median house prices increased in suburbs as diverse as Rockbank, Plumpton, Tyabb, Lawn, Diggers Rest, Bright, Officer, Sorrento and Anglesey. You might note that all of these locations with the highest growth in median house prices over the past 5 years, according to realestate.com.au, are locations on the outer fringes of Melbourne or in regional areas of Victoria. They are not in Melbourne inner ring and CBD itself. It really does provide further evidence to expose the myth that the best capital growth is achieved in so-called prime inner city suburbs. Please subscribe to our YouTube channel so that you're not missing out on all our content, our property news updates, our suburb analysis reports, and lots of hints and tips around the property market. Leave us a comment. Let us know if you've got any questions or suggestions as to content that you might like. Please also don't forget to click that like button. Please check our website for more details on our services and how our advisors and buyers agents can help you. And I will see you very soon. Bye.